In the midst of China's ongoing economic downturn, the Chinese Communist Party, CCP, has deployed a series of measures to crack down on foreign companies, hastening the significant outflow of capital and highlighting the extreme contradictions in the CCP's dare-to-struggle mentality. According to data from Exandi Data, global investors withdrew a net amount of $3.17 billion from Chinese stocks through the Stock Connect trading link between April 21 and 26. This represents the longest duration of capital outflow in the past 5 months. Just a few weeks ago, the Chinese Communist Party, CCP, implemented a series of harsh measures targeting foreign companies. Independent commentator Zhu Mingyang believes that this is a foolish retaliatory action taken by the CCP in response to the containment efforts by the United States and Western countries. On March 26, the U.S. corporate investigations firm Mintz Group released a statement saying that Chinese authorities conducted a sudden search of their Beijing office and detained all 5 of their employees working in mainland China. On March 28, Chinese authorities detained an employee of the Japanese pharmaceutical company Eisai. On April 4, Chinese authorities announced a cybersecurity review of the U.S. computer memory manufacturer Micron Technology. On April 24, Chinese authorities made a surprise visit to the Shanghai office of the U.S. consulting firm Bain & Company and conducted interviews with employees. On April 26, the Standing Committee of the National People's Congress in China announced amendments to the counter-espionage law, expanding the definition of espionage activities and granting law enforcement powers to national security agencies. The revised law allows government agencies to inspect the facilities and electronic devices of businesses, as well as personal smartphones and laptops. Foreign executives are concerned that this may lead to legitimate business activities, such as gathering market intelligence, competitor information, and business partnerships, being treated as espionage activities. Cole, founder of the consultancy firm Cole Group and publisher of the Political Risk magazine, states that this move by the Chinese Communist Party will dampen the interest of foreign companies in doing business in China. Foreign companies do not want to expose their data to scrutiny by the Chinese Communist Party, as the Chinese government may use cyber espionage techniques to replicate the data and provide it to their competitors. The new version of the anti-spy law will decrease the willingness of foreign companies to conduct major operations in China or bring confidential business data to China. In recent months, the Chinese Communist Party has restricted or even directly cut off access to various overseas databases, including company. For example, many clients have found that they can no longer access the database of Wind Information Company, Limited, based in Shanghai. Wind Information is one of the most important databases in China, widely used by analysts and investors for economic and financial data analysis. Cole, the founder of Stratfor and publisher of Political Risk magazine, argues that this move will further diminish foreign investors' interest in investing in China. Investors are increasingly concerned about China's crackdown on accounting firms and due diligence companies, as well as the disruption of data pipelines that provide real-time and quantifiable market information needed by international investors. This information is crucial as input data for models and trading algorithms. Without it, investors find it challenging to understand the true value of investable assets, he said. Lucia Dunn, an economics professor at Ohio State University, suggests that these actions by the Chinese Communist Party indicate a rapid deterioration in China's economic relationship with developed countries. The days are getting tougher for countries that are interested in doing business with China, the Chinese Communist Party. The tactics used by the CCP, such as raiding foreign company offices and detaining foreign employees, are unacceptable in other countries. The CCP surely knows this. So it appears that they may be adopting a deliberate strategy. According to official data from the Chinese Communist Party, foreign direct investment declined by 40% in 2022. The proportion of investment in the manufacturing sector continues to decline. According to data from the State Administration of Foreign Exchange, SAFE, of China, there was a net outflow of $11.2 billion in capital from China during the period from October to December last year. This marks the largest capital outflow since the third quarter of 2019. In January 2021, Foxconn received approval to invest $270 million in building a factory in Vietnam. In April 2022, Foxconn began production of the iPhone 13 in India. Dunn stated, as expected, many companies are now actively reducing their economic and manufacturing operations in China. I believe we will see more and more companies withdrawing from China in the future. Foreign investment has indeed played a crucial role in supporting the rapid development of the Chinese economy. Although foreign-funded enterprises account for less than 3% of all enterprises in the country, they have contributed to nearly half of the foreign trade, 25% of profits in large-scale industrial enterprises, and 20% of tax revenue. Foreign enterprises have also played a significant role in supporting major cities in China. In Guangzhou, foreign companies account for over 62% of the city's total industrial output value. In Shanghai, foreign investment contributes to two-thirds of the total industrial output value. Moreover, in Suzhou and Xiamen, foreign investment accounts for 67% and 70% of the total industrial output value, respectively. Zhu Mingyang's opinion suggests that the Chinese Communist Party's actions, which seemingly contradict their need for foreign investment, reflect the extreme contradictory nature of the party's fake, evil, and confrontational mentality. This can also be seen as an expression of Xi Jinping's diplomatic ideology of daring to fight. Dunn says that the mentality of the Chinese Communist Party's so-called dare to struggle is difficult for outsiders to fully comprehend. However, the struggle initiated by the CCP against the West will be a misguided gamble. Perhaps President Xi believes that by making the West dependent on China, he can now pull out some plugs and disrupt the Western economies to a certain extent. However, I believe this strategy greatly underestimates the economic resilience of Western countries. I think that after a period of adjustment, these countries will be able to wean themselves off their reliance on cheap labor in the illusory market of 1.4 billion consumers in China. We will see that Western countries can actually do better without the involvement of China, the CCP. Currently, President Biden is preparing to sign an executive order that restricts U.S. investment in certain high-tech sectors in China. This executive order will cover areas such as semiconductors, artificial intelligence, and quantum computing. The Chinese Communist Party has shown significant concern regarding this development. On April 21, Chinese Foreign Ministry spokesperson Wang Wenbin claimed that the United States is politicizing, weaponizing, and tooling up economic, trade, and technological issues under the guise of national security. He also emphasized that the Chinese Communist Party will firmly defend its own interests. The anxiety of the CCP is justified. According to data from the U.S. Bureau of Economic Analysis, as of the end of 2021, cumulative investment by U.S. companies in China amounted to nearly $120 billion, with approximately half of it going into the manufacturing sector and around $12.8 billion invested in the computer and electronic products sector. At a time when the CCP government faces a debt burden of 156 trillion yuan, it is indeed in desperate need of foreign investment. The CCP is afraid of decoupling from the United States. However, the U.S.'s actions against the CCP have already escalated from the commercial and technological levels to the strategic level. On January 10 of this year, the U.S. House of Representatives passed a resolution with an overwhelming majority to establish the Strategic Competition with the People's Republic of China Interagency Task Force. The task force is responsible for conducting investigations and providing policy recommendations regarding the economic, technological, and security developments of the Chinese Communist Party, CCP, and its competition with the United States. Speaker McCarthy, when discussing the purpose of the committee, stated, "Our greatest concern for the future is falling behind Communist China. Over the past several decades, we have enacted policies that allowed China, the CCP, to join the international system. But in return, China, the CCP, has exhibited oppressive and aggressive behavior and anti-Americanism.